Thanks for tuning into Talking Point. I'm your host, Neeraj Shah. About 24,850. So we're still about 150 points adrift of 25,000. If that is indeed a big milestone marker, sentimentally yes, maybe otherwise no. Good to get in Abhay Agarwal, founder of Piper Serica, on today's Talking Point to try and talk about what next in the second half of the year, now that major events are behind us, at least domestically. Abhay, great having you. Thanks for taking the time out. And great talking to you, of course. You know, up until 2 months ago, everybody was saying that let the elections get out of the way, let the budget get out of the way, and then we might have a clear direction. Do we have a clear direction now?
Yeah, thank you, Neeraj, first of all, for having me on the show. And I absolutely love that time. I think it's really nice. so, yeah, Neeraj, you have been in the markets for so long, and so have I been. I don't think markets ever give a clear direction of where they are going, and they always surprise bears and bulls both at the same time. So, I think it's always another uncertain event on the horizon that the market starts worrying about, and the uncertainty that kicks in. So yeah, of course, we are through with the elections, we are through with the budget, two big events. The market took it on its chin, moved on. We are where we are. And now I think what the markets are going to focus on very, very hard and sharp are two things. One is the simpler one, which is the possibility of interest rate cuts in the US. And secondly, more importantly and more difficult to assess is the earnings growth trajectory for Indian companies over the next 1 or 2 years. And I think people will start placing their bets, especially in India, which is a very, very stock-specific market. It has always been, and even in bearish markets, bullish markets, astute investors have always made money placing their bets on stocks, specific stocks. So I think it will go back to the traditional old stock picking, saying that, okay, it's optically an expensive market. So where are my opportunities if I look 2-3 years out? Which are the companies which are getting on the growth curve, available at a reasonable valuation? So I think that's where the whole narrative is going to shift for the next quarter at least.
Abhay, so if indeed it's going to be a stock-specific market, and by the way, at the end of the conversation, I'll talk to you about the divvy up between private and public markets, simply because this budget seems to be a fairly positive one for private market investors at least. But for the public market conversation right now, I heard you say that index stays where it is maybe, but people look at specific pockets. Now, your portfolio may encompass the large bets, which are a lot more stable, but a few small bets which have the potency to be the jokers in the pack, to attempt to create that big alpha. I would love to know what are those pockets, Abhay.
Yeah, so I think so. Let me answer the second part first, and I think it's a good question, because we have been discussing this in our messaging to investors and in media also, that if you look away from the noise of the large cap stocks and they are being cheaper than small cap, mid cap stocks, I think there are segments that we have looked at deeply that are starting to do well. In fact, I think they're still in the early stages, though the stock prices may run up faster than the performance still has to kick in. But insurance is one of them. Neeraj, it's not a buy recommendation, but it's public knowledge. We had added ICICI Pru some time back, and Star Health in our portfolio. So I think that these are the two companies that have consolidated for a long period of time, now getting on that sharp growth curve with good tailwinds. The other segment we have been fairly bullish on is agrochem space. Again, a sector that has gone through very long sideways correction, and we had added Dhanuka earlier 6 months back, and then we had added Sharda Cropchem, UPL. So these are the two sectoral bets. We continue to be quite bullish, and this is a bit contra to the market's expectations on the pharma space, especially the large cap pharma companies, Divi's, Dr. Reddy's, because we think that this is the space, again, gone through a long cyclical consolidation. Markets not looking at them, not rewarding them for the work that they have done when they were going through a sideways correction and now going to bear the benefit of that. So I think there are these three spaces we are in our model portfolio, we are heavily overweight on right now, and we plan to be. And second, and one space that we're exploring now is the whole electronic component exports from India, which is still a smaller space, but I think there are very promising companies there that we may, be able to talk about in the next time on the show.
Sure. Okay, yeah, and okay, I take that cue, and maybe we'll talk about it on the next show that we talk to, Abhay. But don't you find starting valuations, just that one question on that electronic export thing, don't you find starting valuations a bit of a hindrance when it comes to these electronic export companies?
It is, I mean, as investors, buyers, we would always like them to be cheaper. But again, if I think the longer the view you can take on some of these growth companies, the less expensive they seem. Uh, and there's always this debate between value valuation versus growth valuation, and are growth valuations too high? From my experience, Neeraj, I've seen that sometimes value valuations for very low growth or zero growth companies turn out to be higher over a long period of time than paying a higher valuation for very high growth companies. And there, when you have companies that are in the range of market cap of 1,000, 2,000, 5,000, 10,000 crore, I think the right way to look at it, can this company become 10 times its size in 5 years' time? Rather than looking only at a price to earnings based valuation, because that may look very high optically and you will not be able to buy that stock. And we have always done well, if I just look at our performance when we took a longer term perspective of growth companies and paid a higher near term valuation multiple. But those companies have always made money for us.
Got it. Okay. But like I said, we'll talk about this in detail the next time we speak, Abhay. I wanted to draw your attention, viewers, to one pocket which I want to ask Abhay Agarwal about, and that's healthcare. Now, a couple of data points that we've gotten. This is, of course, 2021 and 22, but look at the per capita expenditure on healthcare. And as much as we don't want healthcare spends to go up, but maybe they need to go up because health prevention is also a big thing. So look at where India is versus where all of the developed countries are and the kind of spends. Even if you ignore the USA, which is the highest, look at some of the others and the kind of spend that India does. So is there scope for this to improve? And within that whole mix, the current mix for India, and the next chart will come up on your screen, is tilted heavily towards hospitals. 57% of the healthcare market breadth is hospitals, and then comes some of the others like diagnostics, insurance, pharma, and medical devices. Abhay Agarwal, I would love to understand from you, are you playing the healthcare theme at all? And what within that very wide bucket do you like, if at all, and why?
We are very bullish on the healthcare space, hyper bullish, because this is a country which is terribly short of good medical facilities geographically. So you have concentration of good healthcare facilities in large cities, and then people have to travel a very long distance for anything that is non-treatable by a general physician. And there is a shortage of doctors. Government is trying to address it, but the problem is so big that the government by itself cannot deal with it. Now, there are multiple ways to play it, and we don't want to back a situation that we make money of backing a player that is only going to raise prices because of limited supply, because that gets into price gouging. Really, I don't think that's the play here. So, where are the opportunity spaces for investors? One is clearly in health insurance. Very fragmented market, has so far been approached by agents, very high touch point, that has limitations to growth. So more digitization of healthcare will kick in customized policies. And as you showed, Neeraj, in the chart, 8% health insurance, that's ridiculously low. People are still paying a very large amount, almost 70, 80% from their own pocket, just because they're underinsured. They are not insured. And I think the challenge is for health insurance companies to build digital channels into tier 2, tier 3, tier 4 cities to start providing health insurance. So I think that is one space that is now gone through its teething trouble. The regulator is now beginning to be more friendly. So insurance is one space that we are very bullish on. Secondly, the model of hospitals providing multi-speciality treatments and reaching out smaller hospitals. I think that is the other play that we look at. So these two spaces are there for next 5 years, 10 years. I mean, investors can make their bet. And I'm very sure that healthcare as a space will make money for investors.
Got it. Okay, I was about to ask you, Abhay, that since you're so bullish on insurance, does health insurance form a part? So you answered that. So thank you so much for that. That space is also making a bit of a comeback after such a long time, but which gives me a segue into the next question that I want to ask you, Abhay, which is the non-lending financials, right? Insurance forms a part of that, but beyond insurance, maybe some of the capital market players, the wealth managers, and the kind of results that we've seen from a Nuvama, from a Motilal Oswal, presumably we'll see from a 361. I'm just assuming, but I'm guessing that will also be good. Anand Rathi Wealth wasn't that bad either. And the starting valuations are not egregious. Is there merit in trying to own this bucket? Because as more and more India invests, maybe the opportunity size for wealth managers go up, or not necessarily so?
So it will definitely trend up. I see a next 5 year secular growth in earnings for wealth management companies. And these are, again, non-brokers only. So earlier, when people looked at independent private capital market players, the focus was too much on brokers, so Angel or, some of the other listed names. But now I think that whole wealth management business has gone beyond that. It's about advisory services. It's about customizing solutions. So I think that is a space that as the country becomes richer, not the mass market, but the topper end of the pyramid, I think they will need customized solutions that these wealth managers will come and fill that brokers have not been able to fill. And I think that is why you see even an Angel One, which is been traditionally a discount broker, building a wealth management practice now by hiring very senior people from different wealth management companies. So I think wealth management as a space will grow. All these companies are still small. They are doing very well. It will be difficult to pick a winner right now because there are so many of them competing. But I think overall, the size of the pie will keep increasing and will give interesting opportunities to investors if they are able to pick the winner for the next 5 years.
Abhay, does it have to be a winner takes all space, or could it be that multiple people can actually grow? I mean, maybe your idea might grow X and something might grow X plus Y, but even that X could be healthy?
No, I think if you go by what has happened in more mature markets, there is a consolidation. It will start kicking in. It will, because the customers would at some point of time will get tired by being approached by 5, 6, 7, 8 different players for the same thing. So consolidation will happen. I think it will then be who has been able to get the higher wallet share of the customer already sitting there as a gatekeeper and consolidating with the smaller players. That's the nature of that business. Globally, it's been like that.
Okay. Abhay, the other piece is all of this usage of internet, broking, and then data centers, etc., and the proliferation of everything which is energy intensive means that electricity consumption will go up, and therefore the targets that the government of India has laid out for both renewable as well as fossil fuel additions are very, very tall and maybe necessary as well. Is that a bucket to bet on even now, because it's a multi-year theme and power usage obviously will go up only, or are there better areas to invest in? And if you're investing in power, Abhay, would love to know what out there within the subset, because there are financiers, equipment suppliers, energy generators. What do you like here?
Now, again, goes back, Neeraj, as we discussed, the bigger question of, look, the GDP has to grow, get to $10 trillion. And just like you have data on the digital side that has to kick in and is already turbocharging the growth of the economy by facilitating digital infrastructure. You can't look away from the fact that power is going to be a critical part of the GDP growth. I mean, we cannot achieve our dream of 8%, forget 8%, even 4% GDP growth if we are not power and energy self-sufficient. So we'll leave the energy part aside because there we still have a lot of dependency on international oil import, and I think the government will try to fix it. The pressure is lesser right now because the oil prices globally have been subdued. But once they go up, the government will be forced to take action there. But what has been the focus, as you said, is to improve the availability of domestically generated power, electricity, and expand its distribution. So quality of power generation and continuous distribution of power. These are the two things that I think the government is going to be hyper focused on. And in terms of power generation, as the size increases, is going to be a big boys play. I don't think the small independent power producers will exist. Either you know how to run 10, 20 gigawatt power setup around the country, or you will not have a play there because size and scale is of immense importance in this space. So you have NTPC, you have Tata Power, you have Adani, you have Reliance, some of the big guys sitting in there. I think they will keep consolidating their position in terms of power supply. And then you have the exchange, which is IEX, acting as a market index for merchant power. And then you have the financing companies like REC, APFC for power generation. I think some of the state electricity boards will also be replaced or privatized. I think that experiment has worked well. So I think there are multiple opportunities for investors. I would personally like to stay with the power generators because that is a business that will continue to grow. And if they have access to capital and balance sheet strength, then developing new brownfield, greenfield power projects will be much easier for them. So again, a great theme, just plays into the whole GDP expansion story.
Got it. Abhay, I have one final question, and that is on a management that is upcoming, which is a textile company. We are talking to Arvind, of course, but be that as it may, not asking you about Arvind individually, but about some of these labor-intensive sectors on which there was hope that there will be some fillip in the budget, textile parks, what have you. We recover some of the lost ground to countries like Bangladesh, for example. Now, what is your sense on what are corporates doing out there, independent of the government support? Do you think textile manufacturers could make hay? Because I know you were invested in one of the textile companies in the past, which was an export-oriented powerhouse of sorts, if I'm not wrong. What's your view now?
So yeah, Neeraj, I think that's absolutely right. We were invested not in one but three, and we made our money very quickly and we got out. So that played out well, but it has been a disappointment, frankly. I don't think when you talk to the textile company owners, they are not really expecting any government support. They're not expecting any FTA signing with UK. They're not expecting anything. They're basically being left on their own, and that's the hard reality. Nobody knows why that is. It's a sector that is the second biggest employer of labor. So you would expect the government would support it to make it more competitive, because that countries like Bangladesh and Vietnam have better tax treaties with large destinations like Europe and US, and they're benefiting from that. So I'm just surprised that the Indian companies are still able to make profit. You look at the economics that they have; they're extremely well-run companies, very efficient, very good management. But it's just that running on much lower margins and much lower growth than they would have if they had got some government support, in some form or fashion. So that's the hard part of it. I'm still hoping that they get parity with other countries, or at least they are allowed to go and set up their own manufacturing facilities in those countries. I think that is what is going to happen, because we have seen one of the companies do an acquisition in Turkey, set up a plant in Bangladesh. There are already people talking about setting up facilities in Vietnam. So I think the natural outcome will be now to compete with these players. The Indian companies will go and set up their own facilities there. Again, not a good outcome because instead of creating employment in India, they're going to create employment in those countries. So I think enough food for thought for the Indian government to fix this problem for once and for all.
Well, Abhay, what I'll do is, we're getting Arvind Limited on the other side of this break, so I'll try and ask him on those points. But great to get those cues from you to be able to ask him. Thanks for that. And thanks for joining in and giving us your thoughts. I know we missed out on the private markets versus public market conversation. Maybe that's for the other time. And thank you for the compliment on the tie. I love it too.
Thank you, Neeraj. Thank you for having me on the show.